Donald Trump is one of the most well-known names in real estate, but what's the secret behind his success? Is it his larger-than-life personality? Or is there a formula that anyone can follow to build a real estate empire? In today's video, we're diving deep into Trump's investment blueprint, revealing the key strategies that helped him become one of the most successful real estate moguls in history. From location to leveraging other people's money and building a powerful brand, we'll break down how these tactics can work for you. Ready to learn the secrets to success? Let's get started. Focus on location. Donald Trump has often said, the most important thing in real estate is location. This phrase has become almost synonymous with his name and is at the core of his investment strategy. The logic behind this is simple. No matter how great a property is, if it's in the wrong location, it's unlikely to provide a substantial return on investment. Trump's early career centered on purchasing real estate in highly desirable locations where demand would always remain strong. Trump's Manhattan investments serve as prime examples. He didn't just buy random buildings. He focused on iconic, high-demand addresses like Fifth Avenue and Central Park South, areas that have always attracted wealth and prestige. One of his most notable projects was the Trump Tower, a 68-story skyscraper on Fifth Avenue, which has become one of New York's most recognizable buildings. The building was developed in an area where demand for luxury real estate was booming, and its prime location in Manhattan's retail and residential hub allowed it to achieve high rent prices, high resale value, and continuous capital appreciation over time. For aspiring real estate investors, location is a lesson that cannot be overstated. While most people think of urban areas when considering real estate, it's important to look for neighborhoods with future potential, areas on the verge of gentrification or up-and-coming districts. Understanding the potential of a neighborhood's growth trajectory is key to identifying the right property at the right time. This often means researching local trends, zoning regulations, infrastructure developments, and future city plans. High-demand areas, such as those near transportation hubs, business districts, or renowned schools, tend to attract tenants, which translates to higher rents and greater value retention. The location also impacts the capital gains when the property is sold. In short, finding prime locations with the right mix of accessibility, desirability, and growth potential is key to Trump's investment success. Whether you're investing in a residential property or a commercial building, a location with strong demand and potential for appreciation is vital for generating long-term wealth. Location should always be the starting point in your real estate decision-making process. Leverage OPM, other people's money. One of Donald Trump's most powerful strategies is the use of other people's money, OPM, to fund real estate projects. Trump didn't build his empire using just his personal wealth. He skillfully leveraged bank loans, private investors, and partnerships to finance his high-profile projects. This strategy, known as leveraging OPM, enables investors to control large assets with a fraction of their own capital, significantly multiplying their potential return on investment. Trump's approach to financing often involved high-leverage deals, where he would put down a small equity stake and use borrowed funds to cover the remainder of the project's cost. This approach allows investors to take on bigger, more lucrative projects with less personal risk. For example, when Trump developed the Trump Tower in Manhattan, he used a combination of bank loans, private lenders, and investors to fund the project, while maintaining control and ownership of the building. By using OPM, Trump was able to build a massive real estate portfolio without having to put up all his own capital, which means he could use his wealth to fund even more projects, diversifying his holdings and minimizing risk. For new investors, leveraging OPM is an essential strategy for scaling up quickly. Instead of sinking all your available capital into one deal, you can tap into credit lines, private investors, or even crowdfunding platforms to secure the funds needed for real estate deals. Banks are often willing to lend large sums to those with a solid track record, while private investors can bring capital to the table in exchange for equity stakes or a share of the profits. The key here is to structure deals in a way that both the investor and the lender benefit. A solid business plan, A detailed property analysis and a clearly defined exit strategy will help secure financing from lenders or investors. Of course, while leveraging OPM is a great way to multiply returns, it also introduces significant risk, especially if the market turns. That's why it's important to understand the financial structure of each deal, the terms of the loans or partnerships, and to always budget for contingencies. Leveraging OPM allows you to access larger projects and scale quickly, but it also requires discipline, negotiation skills, and a strong reputation to attract investors and secure favorable financing terms. Create a brand and build an identity. One of the distinguishing features of Donald Trump's real estate success is his ability to build a powerful personal brand around his name and properties. Trump didn't just build buildings, he crafted an identity for each project, making his name synonymous with luxury, exclusivity, and high status. This brand image has allowed him to command higher rents, attract premium buyers, and establish properties that are instantly recognized around the world. The Trump name has become a luxury brand in itself, much like other famous brands in fashion or automobiles. For example, the Trump International Hotel and Tower is not just a building, it's a lifestyle statement. By placing his name on his developments, Trump has been able to generate premium pricing for his properties, capitalizing on the perceived value of his name. The Trump brand signifies prestige, quality, and luxury, and as a result, buyers and tenants are often willing to pay a premium for living or working in a Trump-branded building. Creating a brand is an essential part of Trump's real estate strategy, and it can work for you too. For smaller investors, building a strong identity around your properties can help you stand out in a crowded market. This doesn't necessarily mean you need to plaster your name on every building, but you can still create a unique identity through quality design, exceptional customer service, and market positioning. Consider branding your properties based on their location or the lifestyle they represent. A well-executed brand identity can translate into higher occupancy rates, better pricing, and greater resale value for your properties. Branding is not just about the physical building, but also about how you market it. Effective marketing strategies, online presence, and reputation management will help you build trust and recognition in the market. Whether you're flipping homes or building luxury condos, creating a strong, recognizable brand will add intangible value to your properties and set you apart from competitors. Understand the power of timing and market cycles. Trump's success in real estate has also been attributed to his acute understanding of market cycles. Real estate is cyclical, and the ability to buy at the right time and sell at the peak is crucial for building wealth. Trump has repeatedly said that he is willing to take advantage of market downturns, buying undervalued properties when others are pulling back due to economic uncertainty. For example, during the 1980s recession, Trump purchased properties at a fraction of their worth, knowing that the market would eventually rebound. This strategy paid off when the market recovered, and he was able to flip properties for huge profits. Similarly, Trump was able to capitalize on the 2008 financial crisis, purchasing distressed assets at low prices, which later appreciated as the market recovered. Understanding the timing of real estate cycles allows you to maximize returns while minimizing risk. By purchasing distressed properties during market slumps, you can secure valuable assets at below-market prices, giving you a head start when the market rebounds. For investors, this means being aware of the current market conditions and timing your acquisitions accordingly. Diversify your portfolio. Donald Trump has long preached the importance of diversification in building wealth. While he is most famous for his real estate ventures, Trump's portfolio includes a range of investments in casinos, resorts, golf courses, and even branding/licensing deals. This diversification strategy has allowed him to weather market downturns and capitalize on opportunities in different industries. There you have it. Donald Trump's real estate investment strategies aren't just about making deals. They're about making strategic decisions that maximize returns, minimize risk, and build long-term wealth. But remember, success in real estate takes time, effort, and the right mindset. If you found these insights helpful, make sure to like, subscribe, and share this video with aspiring investors who want to learn from the best. Thanks for watching, and we'll see you in the next video, where we'll dive into more investment strategies to help you achieve financial success.